Testing, testing. I think there's like some audio issues. 1 second. Trying to get the mic. Trying to get the mic set up here properly. Testing, testing. I think there's like some audio issues. 1 second. Trying to get the
Testing,
mic.
testing.
Oh, shit.
I think there's like some audio.
Trying to get the mic set up here. Testing, testing, testing. All right. That was way too loud. I think this is way better. Let me just fix the mic positioning. Okay, okay. Testing, testing. Okay. All right. What's up, guys? What's up, guys? Nice to have everybody here. How you doing? I'm doing good, Jay Trader. Thanks for asking. Been a good weekend. Do you use GC or intraday for intraday and XAU for swings? Yeah, that's just preference. It's not like you have to do it that way. I do that because I only intraday trade futures and I only swing Forex. So I have those two separated. Since I'm only intraday trading on futures prop accounts and swinging on Forex. So I don't want to like mix up the two. Just fine tuning some audios, some final audio issues here. I don't know why. Someone messed up my mic. I think my brother was on my thing yesterday and tweaked some of the stuff. I think we should be okay now. I think we should be good. All right, I'm gonna make a final announcement on Instagram and then we'll get started, guys. Yeah, switched up the music, switched up the vibe this week. I got a lot of complaints about the birds last week. So we're trying a different route, doing some jazzy lo-fi. I think it's nice. I think it's nice. Where is it? I'll take a look at your guys' questions real soon. Just give me a moment. And some final announcements. Yo, Clay, and just to answer your question while I'm doing this here. What Forex firm I like? Currently, I'm focusing on a new one I'm trying out. I think it's called Think Capital, and it's a broker-backed prop firm by Think Markets, right? So, what I mean by that, Think Markets right here, they are a actual broker right here, right? But it's way more reputable than these white label firms like well, I don't want to name any names, but when you go through broker-backed, it's much more reliable. You're dealing with the broker directly. There's no middleman there. There's no funny business essentially, right? So these are very trustworthy. I highly recommend Think Capital. Any broker backed. I think who else? IC Markets has one. IC Funded, I believe that's what it's called. I think Blueberry also has one. But I'm going with Think Capital right now. They're broker backed, very reputable, and honestly, I trust them. So I am currently working on that. I'm testing out a 100K account, and that is what I'm going to be working on. That's what I'm focusing on right now. So yeah, Think Capital, really good in my opinion. Great story. All right, I think we're good now. Audio's good. All right, let me take a look at chat. Birds were lit. No, the birds are nice. Oh, so we do got some bird fans. Okay, we might bring them back next time. May bring them back next. Oh yeah, Clayton. Yeah, they are cool because you can also definitely, just like I showed here, you can trade directly on TradingView with them. So that's why I went with them. I do like that direct. I do like that direct trading feature because I love doing that. That way, it's very easy for me. So yeah, that's also a big plus. Big plus. Can you explain daily profiles for today's forecast? I don't use daily profiles. I actually don't. I think it's already baked into my model based on the fair value gaps. The day is gonna play out based on whatever profile it is. Right? I don't really like to pay attention to that. I don't think it. Well, like I said, it's already baked into my. So I don't have to think about it. DP for futures? No, think capital. This is just for Forex. Just for Forex right here. Please explain order flow with examples. Yeah, we're gonna go into that. Pretty much that's everything I do, pretty much from top down. It's all order flow. It is all order flow. How you doing, sir? Loki missed you. What's up, Yash? What's up, Yash? And do you use, last question right here before we get started, promise guys. Do you use dealing range to measure a discount and premium raise? I do not. And I'm assuming you're talking about dealing range like this and the 50% level, and I could only look for shorts once we are above that and then go lower. That is not what I use. And I believe if you did that for every single dealing range you were looking for shorts out of, you would miss all the moves. I guarantee you would miss a lot of moves, because trending conditions, when the market is trending and aggressive, the market does not retrace aggressively like that. That's not what the market does. When the market is strong, when the market's very in expansive conditions, it might not retrace, or most likely will give you very small retracements to continue going. You get a lot of breakaway gaps. You get a lot of small retracements. Something like this is not indicative of a strong market. In fact, you don't like to see deep retracements like that, which is why I don't look at 50% level. Let's say I have a fair value gap right there and a fair value gap up here. I'm looking at this one right here, because if the market's strong, it's going to respect this first discount array. The fair value gap itself is a discount array, right? I know some people sometimes confuse this, where when I say discount array, they think, all right, it's an array in the discount of this price leg. That's not true. A discount array is just a level that price can move higher from. In short, it's just a support level, right? And I actually made a tweet about this the other day, that we all trade, believe it or not, if you don't want to believe this, we do just trade support and resistance, because all the fair value gap is support. All the swing high is resistance, or bearish fair value gap, resistance. We're all just trading basic support and resistance. So I hate how people think they're better. A lot of ICT traders think they're better than other traders because they trade this and that. There's this whole logic and algorithm behind everything. It's just support and resistance. Call it for what it is. But yeah, back to the original question. No, I don't use dealing ranges like that. I do not. Do you use CRT or sweeps? I don't use CRT. Like, again, CRT is just another stupid thing for people to think they're smart. It's literally just sweeping previous candles highs to target previous candles low. I do use it, but I don't call it CRT. Like, come on. It's literally just how the market works. So looking at the candles, are we respecting or disrespecting? If we are respecting, well, we're targeting the opposing candles low. Quite simply. Remember the presentation, Nils? Yeah. Did you change your profile picture, by the way? I barely noticed. You usually have that big orange background going. But yeah, good shout there. I always forget the demonstration cursor. That would definitely help a lot. How do you know if price will trace into a 5-minute gap? All right, guys. There's a lot of questions. Let's actually begin the forecast, and then we can go into that. All these questions you have here. So let's begin with the forecast right here. As always, starting with dollar. And let me pull out the calendar, the economic news calendar, because that is the first thing. Always want to be looking at the economic news calendar. You'll hear me talk about it all the time. It's our roadmap. We absolutely need to know what that's doing, because it'll help us lay out some expectations for the week and what days we need to be careful around, what days we should not trade, what times we should not trade, and what times we should absolutely not be in a trade. For example, last week we had CPI. You would absolutely not want to be in a trade during CPI. So again, this is an example of stuff you have to be very, very cautious about, and understand what times certain news events are, what days certain events are, such as USD bank holiday, right? Starting here on Monday, we have a USD bank holiday, meaning we're likely not going to have much volatility today. You're going to see that present across ES, NASDAQ, I believe even dollar here. Nothing happened today. It was just straight up consolidation. So if you traded today, you took a loss, you were expecting big movements, you likely weren't aware of this right here. And being aware of this is an easy way to be able to avoid losing in conditions like that, because we expected conditions like that to be present in price today. For example, this. Nothing happened today. Nothing happened today. Nothing happened today right here on dollar. If you look at ES, nothing happened today on ES. So if you took a loss right here, you just didn't check the economic calendar. You didn't see it's a USD bank holiday, and expectations on USD bank holidays is price action like that, where we just don't have volatility and we don't go anywhere. It's just a very easily avoidable day. Save your mental capital, take the day off, and come in on Tuesday, Wednesday, Thursday, Friday, and look for your trades there. Now, where did my calendar go? There it is. There it is. But as you can see, a week like this is way more favorable than a week like last week. And let me actually pull last week's economic calendar up, because last week it just becomes a bit more difficult to navigate through the week when you have a big three news event in the middle of it. For example, this is last week's calendar. Also a bit dry compared to this one, just based on, first of all, the amount of news events compared to that. But when you have a big three news event in the middle of the week, it sort of just makes the week so much harder to navigate, because now we have the expectation that price will likely just hold up until CPI, which will be the big injection of volatility. So pretty much your whole first half of the week is cooked, pretty much. It's almost scrapped, where you sort of have to just wait until Thursday and Friday. Whereas on the week like this, we have zero big three news events to worry about. All we're really worried about this week is this USD bank holiday. After that, the rest of the week looks very good, right? For consistent volatility. We don't have to worry about FOMC or NFP or CPI. It's really just, all right, we have red folder news every single day on a lot of assets. All right, I mean, right here, GBP, red folder news, CAD CPI, USD, Trump speaking, that's tentative. You don't really know when he's going to speak. So it's not really much you can do with that. But 7:30, AUD news, NZD news, more NZD news, GBP CPI, USD, FOMC meeting minutes. This right here, by the way, is not the same FOMC as FOMC statement and the press conference. I actually, someone in the Discord asked about this, where should we treat this one like a normal FOMC? And no, you should not, because this FOMC meeting minutes typically doesn't see much at all, if any, volatility. The one you should be careful for is when you see those two news events, right? So you're going to have one at 2 p.m., which I believe is the statement, and then at 2:30 is the press conference. And that's a two-stage news event, right? So at 2, you'll typically see some sort of manipulation, where at 2:30, you may see the actual expansion of the move play out. That is the one you want to watch out for, the FOMC statement. But FOMC meeting minutes is not something that we consider, that I consider big three. You can trade on this, totally fine. Don't worry about that. It's not a big three news event. Moving on, we have 7:30 AUD red folder news. Thursday, 8:30 USD red folder news. More AUD news right here, and then GBP news, Euro, a bunch of Euro news over here in the London session. More GBP news. Like, we're just stacked across the board with high impact news events. More CAD news right here at 8:30, 9:45 USD news, and CAD news yet again over here at 12:30. So we have a lot of high impact news, right? This sets up a potential nice week. Now, this doesn't mean we absolutely will get a nice week. We can still have shit price action, but these are just the probabilities. These are building expectations. We can potentially see some good price action based on this economic calendar. But again, doesn't mean you have to force everything. Still be careful. Let price tell you what it wants to do. But the news calendar is looking quite nice right there compared to, again, last week's calendar, which, as I was mentioning, this just sort of places a little stump on the week where, now we have to worry about CPI. Now we have to worry about the day before CPI. We have Powell speaking right here. Newsless Monday, right? It just makes the week a little harder to navigate. I really do like weeks like this. Could be very interesting. All right. So that being said, let's get into the dollar. As always, dollar is the king. It's the king. It's the world reserve currency, and it affects everything. It's going to affect all these majors right here. So let's first look at dollar here. Let's delete everything and start from scratch. So as you know, I always start on the monthly time frame to do top-down analysis. Looking for a bias right here, looking at what the fair value gaps are telling me. What is order flow saying right now? So we do have a bullish order flow leg right here. This is a monthly breakaway gap, but currently we are, let me take a look. We're respecting previous month's high right there. Right, so we're seeing a pullback right here. We're seeing a respect of a premium array, and we seek this discount array. We can potentially continue seeking this previous month's low down here, aligning with this monthly breakaway gap, this monthly target right here. Right, we could potentially continue moving lower off of that. The only issue I see for very smooth lower prices would be this area of fair value on the monthly, which we are just tapping into right here. This is really the only area of support that we can have potential higher prices from to then continue seeking higher prices, right? This is an area of fair value right there, right? But now let's take a look at the lower time frames. Let's see what the lower time frame story is telling us. Let's see if there's a clear picture as to, all right, if we do want to continue moving lower, let's see if there's any sort of weekly arrays, any daily arrays we can use to push lower. All right, so let's take a look at the weekly. What's the weekly telling us? Let's read the story right here. So moving a little backwards in time, we did have this weekly area fair value we were looking for potential higher prices from, right? This right here is that weekly area fair value, right? And we actually, I believe it was this one that we marked here with this overlapping fair value gap. And we tried to reject, and we actually were very close to completing that context. But we saw a huge rejection wick right there. That is absolutely not what you want to see if you're bullish. This is huge bearish intention just coming into the market after being so close to completing its context right here. It's very, very suspicious. And this on the lower time frame is going to be a switch in order flow, shift in order flow. You're going to see bearish fair value gaps start pointing lower, right? And that's not what you want to see if you're bullish. You want to see bullish fair value gaps get created here to potentially, boom, go hit your target right there. This is very suspicious, and eventually we did create this weekly fair value gap. This is actually what we were watching for. Respected it, creating huge wick again, like I just mentioned, with a body closure below it. So the wicks do the damage, the bodies tell the story right here. And the story that this candle told is we want to continue seeking lower prices at that low. So we came down to that low, we closed below it last week, and at the moment are creating expansion off of a previous fair value gap. So there are more bearish arguments right here, potentially even creating a bearish fair value gap right there. All right, so on a weekly, this does look quite bearish to me. Again, we are at this monthly area of fair value. I want to see what we do right here. We start getting daily fair value gaps higher, 4-hour fair value gaps higher. I would take a step back and consider potential higher prices. Now, let's look at the daily first right here, and let's see what the daily is telling us. Because again, if we're bearish, this is our target down here. This fair value gap right here, this opposing liquidity. It's pretty simply weekly flip context where we're failing to offer fair value, we're likely seeking liquidity, right? And that liquidity would come in the form of this low right there. Let's go back to the daily. Now on the daily, it's very, very likely, based on how today's a bank holiday, this candle doesn't do much, that we create a new daily fair value gap right there. So let's mark that out prematurely right there. It's very likely that happens. And this is great if we do want to see lower prices. The fact that we are creating a fair value gap overlapping with this low right there, because what that creates is an area of fair value, the downside right there, right? That's really nice, actually. If we do want to continue pushing lower, it will potentially, would love to see it happen off of that daily fair value gap. If we do start rejecting there, I would look for shorts, dollar long on these euros, on these GBPs, on these assets right here, right? So this daily fair value gap does hold my interest for potential lower prices. If we never get the rejection right here and we start, like I was mentioning, creating 4-hour fair value gaps higher, daily fair value gaps higher, respecting those, well, now it's likely we are respecting that monthly area of fair value and actually start seeking some of these highs right there. Again, we'll have to wait and see how is price going to react at this daily fair value gap. That will be very telling for me right there. So that does have my interest. That daily fair value gap is quite a crucial spot. I would want to see what happens there, because this could be very, very nice for lower prices if we do want to see it. But overall, I am leaning more bearish on dollar. I am leaning more bearish. Just a bit careful at this area. A bit careful. We are respecting right here. We'll see. We will see. I am leaning more bearish on the dollar. Yeah, this looks very bearish. But yeah, we'll see. Not bad at all. So let's go into the Forex majors right here before we get into the indices. We'll get into indices last and then commodities later. So let's look at euro right here. And with that same idea that if dollar does want to continue pushing lower, euro should continue pushing higher. And we do have this monthly fair value gap above price we can potentially target. We are respecting this low right here. Previous month's low and this monthly fair value gap are just the closest premium arrays we can draw towards to if we are bullish in price. And if dollar wants to move lower, euro will also move higher, right? So if we have a bullish bias right here potentially on the euro, how can we get there, right? We answered the question about bias. It's bullish. How are we going to get there is the narratives, right? That's the next step in the top-down analysis. We need a PD array we can look for higher prices from. So we continue moving down the time frames on the weekly. Do we have that? Not exactly. There is no weekly fair value gap or anywhere we can really say, okay, this is a PD array, a discount array we can use to move higher. All right, so if we don't have that question on the weekly answered, let's go down to the daily. What's the daily telling us? Well, on the daily, we have a daily fair value gap right here. We don't have any daily gap right here. We're just consolidating really. So we can potentially see some sort of retracement into this daily gap. If that does want to happen, we can potentially move higher off of that daily gap. But right now we are consolidating. How can we tell if price does want to move down into that daily? That goes into looking at the lower time frame order flow. For example, if 4-hour gaps are pointing lower or 1 hour fair value gaps are pointing lower right here, that's going to tell me, all right, we're likely drawing into the daily gap first. So let's look at the 4-hour. Are we seeing any sort of 4-hour fair value gaps pointing lower? No, not at the moment. The 1 hour, we are seeing some bearish order flow right here in the 1 hour. We have premium arrays being respected, 1 hour fair value gaps being created. At the moment, we're not really respecting that, but we could potentially sweep this high to continue lower. But on the 1 hour, order flow does look bearish right here. So this does signal to me we potentially do want to move into that daily. Overall, though, I'm not looking to short. I'm just reading what the lower time frame order flow is telling me. Overall, I always want to be trading in line with my bias, in line with the higher time frame order flow. So that is what I'd want to wait until we get into a discount array to then look higher. But the euro dollar does have a nice daily gap. We can potentially seek higher prices from, and some close targets would just be that swing high right here, this swing high right here, and eventually this monthly fair value gap. So dollar does look nice for longs. Again, waiting on dollar right here. Doesn't want to respect that. If dollar does retrace right here higher, euro could retrace lower, potentially reach that. And again, we'll see. We'll wait on dollar to see what it wants to do. Everything revolves around the dollar. All right, so that's the main thing we're waiting for. GBP USD does look a bit stronger though right here. Let's start on the weekly or monthly, sorry. And we are seeing a big respect to a discount array right here. Okay, big respect to a discount array. What are some premium arrays we can now seek? Well, we seek previous month's high. Next would be this fair value gap right here. So this is a nice target potentially. Go to the weekly. We have a bullish bias. Now we're looking for PD arrays we can look for higher prices from. So if we're going higher, where from? Well, on this weekly, we had a nice respect. Created new expansion phase out of that. And now potentially creating a weekly fair value gap right there. Let's see what the daily is doing since there's nothing really on the weekly at the moment to work with. Going into the daily, we have a daily breakaway gap right here, and it's likely this is created right here, another daily fair value gap. So let's also prematurely mark that up. Looking quite baggy at the moment, meaning we're already showing a lot of intention to push higher on this candle. It's definitely stronger than euro right now. Keep that in mind. Definitely stronger than euro right now. In terms of some next targets, let's mark them up. That would just be that daily swing high. We do have this next swing high right here. Again, just really waiting on dollar. What are the lower time frame order flow telling us? See how this is different from euro, where the order flow is pointing lower? This is actually still pointing higher. We have 1 hour bullish order flow. So this is telling me that we don't want to retrace right now. We do just want to continue pushing higher. So that is GBP. I could see potential higher prices. Again, it's all revolving around dollar. But GBP is stronger at the moment, so keep that in mind when trading. GBP is stronger right now. But overall, still bullish. Still bullish towards those targets up there. 4-hour plays of GU bags. For my model, I would not. I don't. I wait for like daily context minimum. I don't want to play the bag. I want to be within context. I want to be within a boundary. It's valid though. I mean, if that's your model, you can do that for sure, because that's the expectation for price. We don't expect a retracement, and if we do move higher, it should be off the 4-hour. But I wouldn't take 4-hour direct context swings. I like daily minimum. I think it's higher probability to wait for that. But you can definitely look at intraday trades perhaps inside that 4-hour. If we do get that, could be interesting. But overall, again, I'm waiting for dollar. I want to see what dollar does. Otherwise, I don't want anything to do with the majors until dollar gives me clarity. Going into AUD USD. So AUD USD, interesting indicators marking here a monthly gap. So let's take a look at that. What is that? Okay, so that's what this is. It's a monthly breakaway gap, monthly fair value gap that we were tracing into. And a bag, for who just asked, Amit, that is a breakaway gap, right? But we are retracing into this. So this is interesting. This is quite interesting. If dollar decides to respect this monthly area fair value that we had marked up here and does want to expand off of that and respect that, a higher dollar means lower AUD dollar or NZD USD. Meaning if that does end up happening, we do have very nice potential context to look for shorts out of. Now, if dollar does decide to move lower, like I'm leaning towards it doing, this is not going to matter. We're just going to rip through this. We're just going to continue pushing higher because it's just going to follow what the dollar does. All right, so, but if we do decide to move higher on dollar, could be interesting. We do have a clean monthly context we are coming into right there. Otherwise, if dollar does move lower, we do have this daily fair value gap getting created right here with this overlapping level right there. I would expect that to potentially hold. Same with NZD, USD right there. That's not overlapping, so that right there, I would expect potential higher prices if dollar does decide to move lower. We will be watching those levels. Let's mark that up right here. Again, the indicator will mark this up automatically. I just want to do it myself right now beforehand, just to get the eye, just get the feel here. Okay. USD CAD. USD CAD, we do have this monthly fair value gap. Let's go to the monthly. Monthly fair value gap retraced into. Now, this is an extremely aggressive, deep retracement. This isn't clean. This isn't a clean retracement, right? This is just a huge aggressive retracement. Clearly seen with this. If you go down in time frames, this is really, really aggressive. A daily fair value gap getting created right here, right through that monthly breakaway gap. If dollar does want to move lower, USD CAD will also move lower. Again, we are now flipping that, where these move inverse of dollar, but now these USD base currencies right here move with dollar, whereas these USD quotes move inverse. Now we're going with, right? So if dollar moves lower, USD CAD can potentially move lower off of this daily fair value gap right there. If dollar wants to move lower, USD CHF could potentially move lower off of that daily fair value gap right there into this monthly fair value gap down below price. That could be interesting if dollar does want to move lower as well. Very clear draw right now on USD CHF, just this monthly gap below. USD JPY. USD JPY actually looks quite interesting right here. And by the way, for those of you who have the indicator, this is actually a pretty good lesson in when to flip bias. So first of all, on the monthly, we are sweeping previous month's high. We are running previous month's low. We can potentially seek this monthly swing low right there. Bearish bias. How are we going to get there? On a weekly. So this is where it gets interesting. This is, again, for those of you who are indicator members, this is a scenario where I would use this feature right here. I would go to the auto bias and I would flip this to bearish. You want to force a bearish bias right there and remove that weekly gap, because that's what that will do. And now it's going to show you all the fair value gaps pointing lower. For example, on the daily and on even the 4 hour and below, it's going to start showing you all the bearish fair value gaps. This was already complete, so it's not going to show it. But let's go back to the weekly. Let me tell you why. The reason why is because what is happening right here in price? And what do we know about fair value areas? We don't want to see deep stings into them, right? So initially we had this weekly fair value gap right there, and we had this overlapping area fair value we were respecting right there. This next candle right here should have continued expanding higher if we were truly bullish. That should have happened, but it didn't happen, and we saw this extremely large displacement into our area of fair value. We don't like to see deep stings into areas of fair value, right? Because that's suspicious. Fair value is already offered here. Buy side, sell side, buy side again. The only area where fair value is not offered is just above that. So when price comes deep into a fair value area, it's likely seeking opposing liquidity right there. So this fair value gap right here, these fair value gaps that you find inside, deep inside fair value areas, these are called fair value breakaway gaps, where if we retrace into them, we're not looking for higher prices. This is just a fair value gap deep inside a fair value area. We don't expect higher prices off of that. This is not a fair value gap you want to look long from. Which again, it's actually pretty interesting when we talk about that concept in the beginning of the stream. When you use dealing ranges like this, look, a fair value gap in a discount. Ooh, that's a great discount fair value gap. Not at all, because not all fair value gaps are valid to long from. You need to understand fair value. What's happening right here? Look at the left. Look at this fair value area. Right here, I'll just mark it up again. This one right here. We know that if we see deep stings into areas of fair value, we're likely seeking opposing liquidity. This is what I call flip context. So if we wanted to push higher, it should have happened right here at this level or at this fair value gap, not this one. Okay, so you want to absolutely, when you see that, flip your bias, make it short. You do not want this indicator still to be marking this fair value gap, and you do not want to be looking for 4 hour fair value gaps, splicing out of that to then look long. That is not what you want to do. Okay, force the bias short, understand your areas of fair value, remove that, and play in line with that flip context, which is lower. So JPYX looks very bearish right here towards these lows down here. Let's mark that up. Again, big rejection right here. This next candle should continue expanding lower towards this weekly swing low. All right, beautiful. And we should just continue pushing lower. Pretty big move on JPY today, actually. But yeah, this is really nice. This 4 hour fair value gap held beautifully, and we're following through on that. So I would like to see this just continue reaching for this low right there, right there. All right. Do you treat SMT in a higher time frame FVG between gold and GC as a valid SMT? No, I don't really look at it like that. I only look at SMT between gold and silver. I don't look at it between like XAU and GC. I don't do that personally. Like if I'm intraday trading gold, I'm just gonna work off of what gold is doing. If I'm swinging XAU, Forex, I will look at what that is doing, and I just work off of what those pairs are doing. And I try not to confuse myself, because I know it can get confusing. Sometimes they do different things, and I just separate them, right? If gold is doing this, I'm just gonna work off of what gold is doing, of what that specific asset is doing. But yeah, that is JPY. That does look quite bearish right there. Again, waiting on what dollar does. Let's see if we want to respect that daily for those of you who missed it. Sometimes RR from entry to context, area, high or low is not 2R. What should we do in those situations? All right, let me just paint an example here. So I'm assuming that your 2R, you're saying that your 2R is sometimes, it's often that it's way above context, right? I'm assuming this is your question. What should we do in the situations? Is that correct? Filani? Assuming this is your question, that will happen sometimes. For me, it's not like it happens every time. I don't think it happens often. I mean, it does happen, but in a scenario like this, what I do is I'll still take it, you know, as long as, let's be reasonable here, as long as it's not something insanely above context highs. I like to just, I feel comfortable targeting 2R above it, like in close proximity above the context high. I don't have an exact number, but if it's something crazy like that, I won't take it. But if it's something reasonable within close proximity, I'll still take that, right? And in that event, since I am targeting above context highs and my overall target right here is taken, when this context high gets tapped, the moment it gets tapped, like right here, I immediately will go break even. Because once that context high is tapped, that's liquidity that just got taken, right? So we don't know if price wants to continue expanding higher, or it could potentially start consolidating, or it could start retracing right here. It's, you don't know, right? Because the initial idea was based off of that context, right? So once context is taken, you submit to whatever wants to happen right here. You're going break even, and yeah, let's see. Yeah, that's what I would do. I always go break even when context highs is taken and my target is above that context high. Right? Because within high probability, the lowest probability is that we continue expanding higher. High probability is you get your delivery, your TP hit within context. The next highest probability thing is for that context to get hit. And then the lowest probability within high probability is that we actually see new expansion through context, creating new fair value gaps out of that. So while it can potentially happen, that's what we want to continue seeing happen in high probability price action, is fair value gaps get respected to create fair value gaps, which is what context is, a retracement into a gap. We want to see new expansions higher if price is in high probability trending conditions. Within that, we can break down probabilities within context. And like I was just mentioning, the highest probability thing within high probability context is to see a reaction in general, to see a bullish reaction in general here. The second highest probability thing is to see your entry pattern form. The third highest probability thing is for your 2R to get hit within context. The fourth highest probability thing is for context to actually get hit. And then the lowest probability thing within high probability is for that expansion to happen. So if you continue to target higher, that's the lowest probability thing to happen. Where if you, again, this is why I like targeting 2R within context, because that's the highest probability thing to happen within high probability conditions. So you're just like, you're boosting the probabilities, right? If you have that within high probability context, it's very likely you get that, right? The further and further you start targeting, the less and less likely it is that your target actually gets hit. The less and less likely. You're lowering your probabilities the further and further you have to demand price to reach for it. Where if it's within context, that's very, very high probability, because now you're only demanding a rejection, some sort of reaction out of that. You don't even have to hit context highs. So this is ideally, it is within context. But yeah, I hope that was insightful. Hope that was insightful. Take a look at this right here. Again, this is also a scenario for you indicator members where you would want to force bullishness here, right? We're very clearly not bearish anymore on ES, especially this right here. It's such a big deep retracement, this close to all-time highs. At this point on this retracement, you at this point on this candle, you are removing that bearish bias and you're going bullish. You're switching that to bullish, right? Because you don't want to see that weekly bearish for value gap. Because breaking this down from the top down, we are very, very strong. We are in very strong trending conditions, bullish order flow. We're at all-time highs. The highest probability thing is we continue reaching new all-time highs right here. Now, based on candlestick logic right here, what are we doing to the previous month's low? We're sweeping and respecting it, meaning the next likely target is previous month's high. Respect a discount rate to reach a premium rate. So now we very clearly have a bullish bias. Beautiful. Now we need PD arrays to frame higher prices from. This is our narrative. If we're going higher, where from? Well, we don't have a question. We don't have an answer to that question on the monthly. Let's go to the weekly. Is there anything on the weekly? No, there is no weekly for Valley Gap that we can retrace into. That question is not answered on this weekly time frame. Now, in terms of where can we still target, I am still targeting, well, let's mark out this weekly swing high as well. That is a nice target before that all-time high right there. Okay, we can potentially draw towards that. Again, reading the candles right here, candlestick logic, what we just did on the monthly applies to the weekly. It applies to the daily. On the weekly, we swept previous week's low. I believe this was actually S&T as well with NASDAQ right here. Right, that's nice. Go back to ES. S&T on those lows, but we swept them on ES. Previous week's low swept. We're likely seeking previous week's high. And then this weekly swing high as your next premium array. Price always moves from a discount to a premium array. Okay, so again, bullish bias confirmed here yet again. All right, so now let me mark these as sweeps, and I use these X's. If you've ever seen X on my chart, that is, see these right here? That is me looking for or identifying liquidity sweeps, right? Where we are respecting swing low. So sweeping. So let's go to the daily, and what is the daily time frame telling us? So we have our bias, and we have some nice targets right here on ES. Let me make my chart look pretty. And again, beautifully marked right here, the indicator daily for Valley Gap right there. In terms of where can we likely head towards next, well, we also have this daily swing high right there as a target. Well, again, we're gonna have to, what I want to see is how we react at this level. Potentially, if we do want to start shifting on the 1 hour, we can target this daily for Valley Gap down here to then continue pushing higher. So again, this level right here is something I want to gauge the reaction. This is where reading the lower time frame order flow, the 4 hour, and this goes into my pulse model. I know I got a lot of questions on this lately. I've been trading my pulse model, which is just my intraday futures model. The 1 hour, the 4 hour, the 15-minute, these time frames right here are my compass. They are my guides. What is that order flow doing, right? So for example, if after this level right here gets tagged and we start seeing 1 hour order flow shift to the downside, I will allow myself to look for shorts on the 1 hour for Valley Gaps down into this daily. And once we get into this daily, I'm again waiting for my compass to point and guide me. Are the 1 hour for Valley Gaps going to start pointing higher? All right, now we can look for longs again towards these highs. We're just remaining in constant fluidity with the pulse of order flow on these time frames, on these compass time frames, the 4 hour, 1 hour, 15-minute. What are they doing? Where are they pointing at? How are we respecting higher time frame arrays? What are we drawing into potentially? If we respect that, like I just mentioned, potentially go down into that. Currently, we are seeing top again. There is no, well, it's a bank holiday, right? So this was expected. There's really not much we can do right here. What I want to see is once we do tag that, are we going to shift aggressively lower and look for shorts potentially tomorrow? Or are we displacing right through that, creating for Valley Gaps to do that, showing no sign of reversing to then play longs towards this next target? And then again, are we displacing aggressively through that to then look for longs towards this next target? Or are we respecting that, moving lower, and we can start looking for potential lower targets right there? Again, it's gauging the order flow, reading the compass right here on the lower time frame order flow. But it's very important to establish your higher time frame PD arrays on the monthly, on the weekly, on the daily. That's why we did all that analysis, establishing, all right, these are our points of interest. We want to be potentially drawing towards those or drawing away from them, towards or away. And these are what our higher time frames PD arrays establish, right? Like I mentioned, we had this level we can potentially tag and then draw away from into this one. So into or away, they're magnets or they're launch pads. And we gauge that by the lower time frame compass. So yeah, that's a little more insight into how I'm trading that. You get it's a little more using the time frames a little bit differently than the swing model, which I would call the summit model. Whereas on my swing model, what I'm doing is I'm simply demanding price retraces into my daily gap. And I'm waiting for that retrace, and I'm not doing anything in the meantime. I'm waiting for that. All right, once we do get into that, boom, it's go time. Let's look for that 1 hour for value gap, the 1 hour impulse shift, and let's look to long that. Whereas here, the reason it's called pulse is because you're trying to keep up with the current pulse of the market. Whether it's starting to trend lower, let's look for shorts lower, or come in, move higher, or are we displacing above that? All right, let's look to continue playing that bullish pulse towards that high. And then are we still displacing higher? All right, let's play the bullish pulse of the market towards that high. It's a bit different. It's a bit different. I would argue it's a bit more advanced, requires a bit more screen time and not intuition, but experience, because you are utilizing just way more time frames. You are making use of the lower time frames. So if you're new, there is more room for error because you are refining more, and you are trading counter trend at times. Whereas on the summit model, my swing model, you're refining less, right? You're really just working with the monthly, weekly, daily, 4 hour, 1 hour, and that's it. And you're looking for context on the daily, weekly, monthly, and looking for your entries on the 1 hour and 4 hour. Whereas my pulse model, you're using all of these, right? So as you can understand, there's a bit more room for error. There's more refinements to be done. There's more time frames that you have to keep in mind are all in context of each other, right? You don't want to long in 1 minute if there's a 5 minute below, and there's just a whole lot more things that you have to think about. And the way you combine these time frames can get a little advanced, right? So that's the pulse model in a nutshell. I thought I should touch on that because I got a lot of questions on that. I don't think I actually have not made a video on that, or haven't spoke about it too in depth, so I had to say that. But that's ES. Bullish, in a nutshell, bullish. So let's mark that up. I am expecting potential all-time highs. These new levels, I am very bullish on it, yes. All right, NASDAQ. Same exact story right here, right? We're sweeping previous month's low. A discount array to target a premium array right there. Bullish bias. How are we going to get there? Weekly. Again, this weekly for value gap is extremely irrelevant. It's extremely irrelevant right now. So if you even want, you could just turn that off and not even have it, because right now there's no weekly for value gaps. We're sort of in this weekly chop. We can still navigate that. We can still navigate what we want to do. But I would turn off that fair value gap. For you indicator members, that's not something I recommend having on your chart right now. It's just going to clutter you and confuse you. I would take that off. So I would do that in that scenario. Just check it off on ES, on NASDAQ. We don't really need any weekly gaps. There are no relevant weekly gaps. But yeah, as mentioned, this is that SMT we saw on the weekly lows right there. So continue pushing higher right here. In terms of weekly targets, we really just have that one. We did close above this, so that's great. That's a great disrespect of a premium array, which is good if we want bullish arguments on our side, which is right here. Nice closure above that. You could potentially even see weekly for value gap right there. This is good respect of, or disrespect, should I say, better said, of a premium array there. So we're bullish. We don't have anywhere we can go higher from on the weekly. Let's go to the daily. Let's see what's there. Right here. Okay. Not overlapping. We have a potential daily for value gap right there as well. And this actually looks a bit more ready to go into that daily for value gap than ES right now. Let me look at ES. But NQ, if you look at NQ, there's really no resistance now. Once we get into this daily gap, there's no resistance coming up into this high. Where if you look at ES, there are few resistance levels, even here. Just a few swing highs you can potentially, use as resistance. Whereas on NQ, it does look a bit more free skies up to that high. So this daily for value gap does become quite interesting. We are getting 1 hour bearish order flow. Fair value gap's pointing lower. 4 hour fair value gap currently marked right there. not very respected at the moment. Tried to do a 2 candle rejection, or couldn't even get a 2 candle rejection where we sweep previous candles low. It was actually looking like it wants to go down to the daily fair value gap. This is quite an interesting level going into tomorrow. Very interesting for me, this daily fair value gap. Put that on the long watch for NASDAQ. That is going to be interesting if we can get into that level tomorrow. Very easy. Yeah, that was an easy NASDAQ analysis. Daily IRL to EUR. Not bad. And then YM looks like dog shit. So there's really nothing to say right here. Or ES looks clean. We have clean daily context. NASDAQ's clean daily context. Don't waste your time looking at YM. Don't waste your time trying to come up with an idea here. Monthly wise, we have the same exact thing. I'll do it just because. But overall, monthly, same idea. Monthly low, monthly high on the weekly. We had this weekly fair value gap right there. Go to the daily. It's choppy. We try to deliver higher off of it, and then we had this really gross consolidation. Now we're seeing a lack of fair value gaps. Just chop, avoid it. I would avoid that. Don't look at it. Oil. So those are indices. Not interested in YM. ES and NQ look quite very interesting coming up into this week. It was actually quite interesting navigating through all of this price action right here. Surprisingly, as shit as it looks, there was some nice setups, and it was not, honestly, I felt pretty in sync with that. All these manipulations lower, they were just, like I just said, manipulations to eventually move higher. We knew that overall, I've been saying this, that these all-time highs are the target. So all of these moves right here, this one, this one, this one, we didn't get tricked by those. We were expecting higher prices. Remember all these gaps from all that tariff news? As you can see, we just continually ran them up. Every single morning I was saying, all right, let's see if this fair value gap gets disrespected for flip context. Same thing happened the following day, flip context. This one right here. I wanted to see higher prices off of that. We did get some choppy chop right there. Overall, we did get this one right here. This was clean context as well. That provided nice setups in there. So this was not bad in terms of maneuvering through that. Looks really gross, but there was not bad price action intraday. But anyways, I think it's going to get a lot easier. If you did struggle through that, do not worry. Overall, yes, it is a bit harder to navigate. I believe we're getting into easier conditions right here. Clear targets, working out of this consolidation. I do want to see this daily gap continue pushing towards that high. All right, now let's get into oil. Where was I? And again, I've been saying this also for a while. Oil's been absolute dog, very dog. Just monthly consolidation. Bullish for value gaps not holding, bearish for value gaps not holding. What does that signal? Low probability conditions when fair value gaps are not holding, right? When you're in a consolidation, fair value gaps won't work. And this is clearly a long-term consolidation we're in. Not a fan at all where this is on a monthly basis. So if I was doing this alone, I would just stop right here. We go to the weekly, you're going to see even more nastiness. Just trading at the equilibrium really of this whole consolidation range right here. This is not interesting. This fair value gap right here that's marked up does not interest me at all. It's gross. It's in the middle of chop. It's honestly, I just don't have a clear read on that. So there's no issue with admitting that. This is just all chop. I'm not interested at all. So let's just continue moving on. Oil is on the no touch list for now until we get something convincing. What's up, Parveen? I see you, Mr. Pickle. Yeah. Chill out though. Please don't spam. My guy Bradley. What's good, man? What's good, bro? The legend Bradley. Going on to gold over here. So gold has been, as we all know, extremely strong lately. Potential monthly fair value gap getting created right there. Could be a breakaway gap. Let's mark that up. Well, hold up. Put the indicator back to normal. overall, we can potentially continue moving higher. We don't need to mark that up right now. Let's go to the weekly. And on the weekly, we do have something very interesting right here. Let's delete all the drawings. And we have a weekly fair value gap right here below price. One thing, now this is quite interesting for high prices. Yes, that is weekly, internal, external. If we do come into that, that is interesting. One thing to worry about though is this extremely large rejection wick right there. That is a lot of bearish intention coming into that gap. I would personally demand extra confirmation here. So probably like for me, I'd demand a extra order flow leg or a fair value gap on a time frame higher than usual. Currently, we are actually seeing intention to move higher here. I'm very curious what that looks like on the lower time frame. But yeah, you can visually see that large rejection, that large intention to push lower. And this is why I would demand more confirmation, because you can see this heavy bearish intention just injected into the market right here. That's not what you want to see. Even on the 4 hour, this does look very aggressive right there. Overall, I do think we move lower. I'm not bullish out of this. Whatever this 4 hour gap is out of nowhere. Again, this is a low probability for value gap where it just got created out of thin air. It didn't even sweep that low. It didn't hit anything relevant, right? So this isn't a fair value gap. For you indicator members as well, this is important to understand. If you're an indicator member, this isn't a fair value gap you go into and look for a 15-minute out of. Very important to understand. Very important that just because the indicator marks it does not mean it's a valid level to long from. You have to do your independent thinking in a scenario like this and understand, where did this fair value gap come from? Because it's not just see fair value gap, play fair value gap. It's very important, where did this came from? What is the overall higher time frame idea? This is coming out of nowhere. Absolutely nowhere. Do not look to long this. Please do not long this. But overall, like I was mentioning, we do have weekly context. I would want to demand, if we come into this, I would not play the first 4 hour. I would wait for even a second leg. Again, just demanding more confirmation. And you get more confirmation by doing things like that. Waiting for an extra leg. Waiting for that gap to show you once you create a new gap. Because those are what the highest probability fair value gaps will do. They will create and respect. They will, first of all, they will respect. And then they will create new fair value gaps. You want to wait for that and let price prove to you that, okay, I'm bullish again. You can trust me. Go for it. So that's gold. That's on the waiting list. Let's put that on the waiting list. We're waiting for a few things right there. First of all, to retrace into the weekly and then for that extra confirmation. So I'll just set an alert right here. So when we do come into that, I know. Silver, I'm not very interested in it. Overall, silver has been really disgusting compared to gold, really choppy, really directionless. So I wouldn't even look at silver. If I'm still long on gold, I know gold has been extremely strong. I would not be interested in silver. Stopping in to see what you got cooking up. My guy, Piccolo is crushing it. My guy, bro. I haven't had time to. I know you sent me some resources for GeoGuessr, bro. I'm gonna get to it soon though. I want to run it back. I want it back. I want whoever was. I don't know if he's watching right now, bro. But I think, guys, in our Discord we have, I think, like a top ranked GeoGuessr player of all time. This guy was cracked. I played against him like a few weeks ago. Got demolished. But I'm working on my game. I got Bradley helping me out. Some resources here. But yeah, that's silver. Let's move it on. Moving along to Bitcoin. Moving along to the Bitcoin. Pretty gross. We completed context on a monthly basis there. What do we know when context is complete? We want to take a step back. That's when you want to take a step back and not continue pushing the pedal. Which, again, monthly context complete right here. You got all this clean price action. What the hell? You had all this clean price action toward... What the hell? Hold up. What's happening? Okay, you get the point. We had all that clean price action off the monthly to work with, and now we have gotten into an extended consolidation right over here. That's why. Okay, now we're back. All right, figured it out. We're in an extended consolidation right here. Overall, this isn't unlike Bitcoin. This is very like Bitcoin to do this. So this shouldn't come as a surprise. Bitcoin does love to get into extended consolidations after seeing extended expansions. This is very typical of Bitcoin to do. So really, I don't really have an idea as to what Bitcoin wants to do next. Simple as that. It's just consolidating. Really, it really is just consolidating. So yeah, that's all I can say. We do have this weekly swing low we could potentially draw towards too. But nothing I'm gonna do, really. Nothing interesting for me to look at here or say as to what Bitcoin's next. It's very dry right now. And as like I was mentioning, Bitcoin does like to get in these big periods of expansions followed by big periods of consolidation. Here's one. Here's one. Here's one. Here's one. Could potentially see something like that for a while. So this is the stuff you want to avoid right there. But that's Bitcoin. And yes, look at Euro NZD and GBP NZD. Okay, let's take a look at what that's doing. Look at what that's doing. What is Euro NZD? Where is it? On a monthly basis, inside candle right now. What are we doing? We are sweeping. Previous month's low swept right there. I don't like this weekly chart. I do not like this weekly price action at all right now. Weekly looks disgusting, mate. This just looks like chop. Generally, this is just chop. Not interested. I would stop right here. That's disgusting. All right, GBP NZD, just an inside candle right now. We have not swept any sort of previous monthly high or low. Also inside of this candle, so we're just getting into we're squeezing in here, and it's very evidently seen right here. Not a fan of any of that weekly action. This is gross. This is just consolidation. This is low probability price action. Please avoid that. Please avoid that. Nothing screams high probability right here. I like to use this filter If you had a friend who you're trying to teach trading to, and you're trying to teach him of like, what does high probability context look like? What does a high probability trade look like? Think to yourself for a second, would this be the example you show him? Hey bro, this is what a clean context looks like. Is this what you're going to show him? I find that to be a great filter. Because no, absolutely not. I wouldn't be like, yo bro, this is the cleanest context, right? No, this is the cleanest price action, bro. No, absolutely not. But yeah. Yeah, JPY looking like it wants to move higher. Bullish biased on that right now. That means JPY quotes are bound to move lower. So these daily context levels aren't interesting at the moment. Yeah. But anyways, that is the forecast. That's the forecast, guys. Been an hour and 9 minutes. Gonna start wrapping it up here. Final questions. Final question. Check copper for the vibes. Okay. Wait, what was copper? Yeah, it was HG. For the vibes. So monthly flip context, failure to offer for value right here, likely seeking opposing liquidity. So bullish biased. Let's delete all our drawings right here. We have a weekly for value gap below price. Now, this goes into what I was talking about on gold. But this is even more suspicious because how close were we right here to reaching that? Wait, that's not the right button. to reaching this level right here. Look how close we were. Does it make sense if price is truly bullish to, if this is our ultimate target, to want to retrace this deep first before reaching it after being this close? It doesn't make sense for price to do that. That bullish intention isn't really there. So if you do want to see higher prices, this is something I would demand extra confirmation from, like a lot of extra confirmation from, if this does want to continue pushing higher, because this is an extremely bearish. Like, let's look at the lower time frames. Look at this. This is daily for valley gaps. You're gonna have, I guarantee you're gonna have a daily for valley gap right here pointing lower. Now that's going to be huge resistance on the way up. That's not what you want to see. 4-hour order flow is extremely bearish. It's not what you want to see. This is not a healthy retracement price is making to then continue pushing higher. This is something you absolutely do not want to take the first 4-hour for valley gap you see out of. Yo, that's fact. Nils, did you just change your... Oh, I think you have 2 accounts. I thought you changed your profile picture back. But anyways, yes, shout out to Dina. Big shout out to Dina, who is an indicator member who got funded using our indicator. So big shout out to Gina. She got funded with Apex last week. Well done. Well done. Congrats. Super happy for you. Did you explain the inversion for FVG? I do not trade inversion for value gaps. So I mean, in a nutshell, again, I'm not your guy for inversion for value gaps, but I have looked at them before. And that's simply when a fair value gap closes above a bearish fair value gap. And now you inverse it, right? That's just fair value gap failing. And it's failing by getting closed above. But again, I'm not your inverse fair value gap guy. I don't use them. Do not use them. No, I was with my wrong one, yeah. You said it's not the healthiest retracement. Can you show us a nice retracement? Yes, a nice retracement is, let me see if I can find one. A nice retracement is when you have that third candle just as a consolidation candle. Right? So this is a pretty nice retracement right here. This next candle was a consolidation relative to this big up close candle. Again, this isn't like, I'm trying to find you a very textbook example. Oof, gold has been beautiful. As I know gold has been beautiful. Right here, that's a good example. This is a good example. When you have that big rejection like that, it's not pretty. It's not pretty at all. It's just a lot of bearish intention coming into the market, right? So when you have that bearish intention coming into the market, where are we? Where was HG? Things become a little more 50-50 because you were very bullish, and then all of a sudden you have this huge bearish intention come in. So now you sort of go back in probabilities, right? Where you may be like 90% bullish right here. This big move is a big injection of bearishness. So now they're like 50% bearish, 50% bullish. This is daily for value gaps pointing lower. Now you have bearish arguments coming into the marketplace. Bearish argument where we got so close to the drawn liquidity. You don't want to see deep retracements when you're this close. That's just something you want to keep in mind. Don't forget that. When you're so close to your drawn liquidity right here, it is not healthy for price to make such deep retracements to then continue going higher. You want to see price reach for that first and then make the retracement. Take the liquidity. But when you see this out of nowhere, it's just very suspicious. Very suspicious. It would make more sense for us to hit that first since we're so close and then want to go lower. All right. Pickle, I'm going to do one last question here. I'm going to have to film some stuff later. Or literally, that's right after this. UPCHF. UPCHF. What's the UPCHF thing? Oh, brother. Okay. Okay, we swept this weekly swing. Respected it. What the hell's going on right here? This is interesting. Very odd. We completed daily context already. Or no? I'm so confused. This example is weird. I don't believe we did. What I don't like about this, what I really don't like about this is how we didn't sweep that low. So it's not like we're moving off of a pivot context, for example. If this was pivot context, yeah, I would like this if this would have swept this low like that. That would have been cleaner to me, but we didn't. We just left that open. So while it is delivering, for me, it's not interesting because it didn't tag that array. It's weird. It's a weird one. Sir Nifty. GBP JPY. Yeah, we got GBP JPY off this daily right now. I see what you're talking about here. Let's just analyze this. First of all, also this monthly fair value gap right here. It's not relevant anymore. On the weekly, we are respecting this level, displacing back higher. It's very likely that these next candles want to target that level. Previous week's high right there. Daily fair value gap right there. I'd have 1 hour fair value gaps pointing higher right here. What I don't like is how I have a bullish bias on JPY right now. I am very bullish bias right there, expecting higher. So that makes me wary because if I want higher prices there, that means quotes on JPY are likely going to be bearish, right? Because they move inverse. So that's the one red flag on that. But if I was treating this setup alone just to look at price action, it's not too bad. Daily fair value gap pointing higher. 1 hour FVGs right here. Again, one thing that worries me is this JPY bias, which is higher. Which if I'm looking higher on JPY quotes can potentially move lower. But GBP is very, very strong right now. I mean, look at all the compared to all these other ones. A lot of very, very strong. Yeah, it's seen right here. So this bullishness on GBP is overtaking that. Very strong right now. I'll keep that on the watch. But GJ, yes, great point right there. Said that GZ. It's also disrespecting this area of fair value right here. This right here. Disrespecting it, likely seeking opposing liquidity. Disrespecting this nested fair value area right here as well. Overall, this does point higher. This definitely does point higher. Towards, let's mark out this level as well. Keep it on the watch here right there. But that's the most interesting JPY quote. That would be the most interesting one. CHF has been really gross overall. I have not really seen much from CHF. Again, if I had to choose my least favorite cross currency quote, it would be the CHFs. As you can see, they're not very nice longer term. They have not been very nice. They're very consolidation-like. And they do have quite chunky spreads at times. Again, you can see it right here. So these are my least favorite cross pairs. If I had to I tend to not focus on them much at all. So those are not very pretty most of the times. And if I had to choose my most favorite cross pair quote, it would definitely be the JPYs. It would definitely be the JPYs. They do move really nice. The JPYs are nice movers. Let's set rejection alert live with you guys right here. This is another one of the indicator features. So we can get alerts when our entry function comes out of our weekly level. So like I said, I want to see potentially more confirmation out of gold. All right, so this is a daily for value gap. I just want to be alerted from I don't want to look at the unicorn. I just want to look for an order flow chain on the 4 hour, right? So for example, if I just want to look for a weekly into a 4 hour impulse shift, if it's set on automatic, this will do that, right? This will just give me a weekly into a 4 hour IMPS, which is just, if you can look at that, if you can see those notes right there, that is what will be alerted. But I want extra confirmation here. So I'm going to go into this and demand an order flow chain, which is, again, an order flow chain is just a fair value gap that creates another fair value gap. That's extra confirmation. So I'm going to go into my alert right here, which I just deleted. So let's actually add that back on right here. That's a weekly fair value gap. And I want to look for a 4 hour chain. And actually, it doesn't hurt to not, you can have it. It's going to alert all of them. It doesn't hurt to also click it on. So whatever, I'll click it on. I'll leave it on. I want to look for a 4 hour order flow chain right there. All right. And that is good. So you could also make it close outside the IRL. I will just wait for that. So we can just apply that. All right. So weekly, we want to go into the time frame now. Now to set the alert, for those of you who are watching, you indicator members, I know we sometimes get some questions on this. To actually set the alert, this is an extremely important step. Again, we do actually have that step marked up right here. Open the 4 hour time frame before setting up the alert. That is how you will allow TradingView to know what time frame it is on and actually send you the alert. So right here, and let me turn off the IRL indicator so you can see this properly. This is going to tell you you're going to get an alert when a 4 hour chain or impulse shift or our unicorn is coming out of it. All right, I'm looking for that 4 hour chain specifically. So we're going to come here, add the alert, create, and now it is there and you can delete that. You can delete that, keep your normal level on. You're going to notice over here on the alerts, it's there, it's active, and you will now get an alert to your phone, to your watch, even to the trading, even to Discord. We have an IRL alerts radar, a whole channel dedicated that automatically alerts you too. So even if you don't set this alert up, you will get the alert on Discord very nicely. So that is huge. Shout out Nose for setting that up. That's insane. No one else has that. And it really has helped not missing setups and being able to track the amount of pairs we do. So that is that. And then now we're ready for gold and we're just waiting for our alert to set up. Beautiful, beautiful. So yeah, that is all. I think I'm going to wrap it up here, guys. Thanks for tuning in. Hopefully no one traded today. And let's kill it this week. Bunch of opportunities. I will be in the Discord updating price action, updating what I'm watching. And yeah, if you're not in there, if you are not in the Discord, link is in the description of this video. If you want access to these indicators right here, that's our pickle indicators and a whole dedicated chat room for you guys, a whole alert bot. The link is also in the description. You can get 30% off your first month using the code right there on the website, Feb25. I think they're sick. But anyways, guys, I really appreciate you guys tuning in. Hopefully it was insightful, and peace out. Peace out. See you guys. Yo, I just saw you. What's up, Day Trading Realtor? What's good, brother? Good afternoon to you too, my guy. Shout out him, bro. That's the OSOC creator, guys. For those of you who are here, he's who I learned that from. The Eval Expeditions. Big shout out to him. We got something very special for you guys. He's very, very nice. We have some good things coming up for the mentorship regarding that. Exciting resources. But yeah, guys, peace out. Peace out. Bye.